let's get back to basics and look at the easiest and safest way of investing in the stock market. Hi guys, welcome back. Let's today just go straight back to basics, strip everything back to its bare bones, and look at the easiest and safest way of investing in the stock market. That's sort of what I wanted this channel, to be all about in the first place. So let's see if we can encourage more and more people to get involved in the stock market and look at the safest way potentially of doing it. It's always going to come with its inherent risks, the stock market, because you get crashes and you get companies going out of business and all sorts. Let's look at the simplest way of doing it whilst ideally minimizing the risks to your capital. Let me explain a bit about the channel. This channel, if you're new to it, please consider subscribing. It's a finance education channel. It's enlightening people on the stock market and the risks potentially involved, or the easiest and simplest way of doing it, building portfolios that will last recessions and into retirement, and portfolio building probably amongst more than anything else. So that's why I wanted to bring this video back to sort of the basics of investing and this easiest, simplest way of doing it, so that I can try and encourage more and more people to do it. And I completely understand the fears of the stock market and the worries that people have, and when you look online or you watch videos on YouTube, it does put a bit of fear into the marketplace, and people will think, oh, you know, I'm not going to invest right now because there's a crash going on, or they're predicting a crash, or it's dipped a bit, and lots, all different reasons for personal reasons. And I just want to put a video out there that explains that actually it doesn't matter what time of the year it is, it doesn't matter what's going on in the market, it doesn't matter what political event is happening, it doesn't matter. Anyone can be investing in the stock market, and anyone can be investing in the stock market at any point. There are going to be huge benefits to that to some people if you get in at the right time, and during a huge dip it might take a little bit longer for those people to see their returns if they start investing at the height of the market. Now, I'm a prime example, so I'll go back to exactly when I started investing. I started investing in late 2019, really, mid 2019. Market was doing fantastic, all-time highs. Very early on in my investing career, the stock market crashed, and there was a huge dip, as we all know, in March, April time. And that would put a lot of potential new investors off, I'm sure. But I'm a living, breathing example of you shouldn't let that affect you psychologically. You shouldn't let that scare you into getting in the stock market. In fact, a situation like that where there's a dip is the perfect time to be getting into the stock market, some would say. Now, there are risks as well, so I'll highlight some of the risks and again give you a perfect live example of what I did. If you go into individual stocks, that probably holds a little bit more risk in the stock market. Now, a couple of things I want to go over, which are going to seem quite obvious, but when you're investing in the stock market, only put money into the stock market that you're not going to need for 10, 15, 20 years, maybe 5 if you pick the right stocks and you're careful-ish with it and you pick the right time. But this should be an investment for the long term, not just a flitter in and out of the stock market and make a bit of money. You should be looking at this as a long-term thing. I've got a couple of videos. I'll put them up in the card in that corner, I think. So I've got investing in the stock market for retirement. I've got investing in the stock market for a defensive portfolio and a recession-proof portfolio. So hopefully, no matter what happens in the stock market, that sort of portfolio should perform quite well. And I've got how it's going to be absolutely inevitable for me not to become a millionaire by investing in the stock market. That video explains how, but I wanted to do another video, just a bare bones video, to show you or explain kind of my thoughts on the stock market, what I've been doing, and personal experiences as well. So let me go through what I think is probably one of the best ways and risk-free ways of investing in the stock market, and that's index funds. So index funds are funds that already often track some sort of financial market fund, whether it's the S&P 500 tracker in the likes of Vanguard S&P 500, ticker symbol VOO. The Vanguard, I'll talk about Vanguard a lot because they're my kind of go-to for these index funds. VTI, the total stock market index, which tracks 3,000 companies in the US stock market, not just the top 500 in the S&P. Vanguard have got emerging markets, they've got growth stocks, they've got high dividend ETFs where they track just the real highest paying dividend companies in America. They've got the REIT index fund where they track the most popular REITs in America. I don't know how many REITs are in that index fund, but a number of REITs, so they are diversifying the money for you. So that's what an index fund is. It's a fund that actively tracks financial market index that's already exists, really. And there's a lot of them out there. There's Vanguard, ARK, SPY, there's loads of them out there. Vanguard for me are the go-to. I've always used them. I'm an avid watcher and subscriber to the Independent Investor channel. I'll put a tab up there to his channel. Ryan, I've been watching his channel for years and he swears by Vanguard, and he was the guy who first got me into the Vanguard S&P 500 index, VOO, and I've now dabbled in the REIT, the high dividending ETF, and total stock market one as well. So thank you, Ryan, from the Independent Investor channel for that, and almost getting me into investing in the first place. I've been following his channel for years and years, and you should too, so go and subscribe to his channel up there. So let's talk about the risks involved in investing in an individual stock. I'll go through my experience again. Any subscribers or watchers of my videos might have heard me talk about this or see me illustrate what exactly happened. I'll put it up on the screen here. So Luckin Coffee, as you can see, I got in pretty much at the peak there. 2 days later, pretty much there was a financial scandal. They were smudging their sales figures, and the stock 2 days later plummeted by 92%. So, you know, if I had, and I got the advice of going into Luckin Coffee, I'll be completely transparent, through a stock market website subscription type service. I won't say who it was. Some of you may know, you may subscribe to it. And would I still use them? Yes, and I still do occasionally. Do I blame them at all? No, not in the slightest. Nobody would have seen this coming. I could have done extensive amounts of homework, more than I already did. I do look into a company a little bit more myself once I've had these kind of tips from this very well-known financial website. Would I have seen this coming? No, not at all. Would they have seen it coming? No, not at all. So that's the risks of investing in one stock. Now, if you'd gone all in, right, I'm going to go into the stock market. I've been given this tip to buy stock. Let's throw all my money that I'm probably going to need in 5 years' time straight into this stock. The worst thing happens and it collapses, which is exactly what happened. Now, I'd only put couple £100 into it, a very small portion of my portfolio, because I don't put too much into riskier companies like this. I diversify as much as I can, but that's the risk that comes with investing in single stocks. So for me, to invest in an ETF, an index fund that diversifies your money for you and tracks something like the S&P 500, the total stock market, 3,000 plus companies, high dividend paying companies, but diversifies your money across the board for you, then that's going to be the safest and easiest way to get involved in investing. Now, as I said, this shouldn't be money that you need in 5 years' time. Don't be throwing your money into the market if you're going to need it. This is going to be for the long haul, okay? Another riskier situation, or not riskier situation, but a pretty abysmal situation right now is the financial sector. So because of everything going on, the financial sector has taken a huge hit. And you've got companies, big banks, JP Morgan, HSBC, one of the world's largest banks in the UK, Lloyds, have really struggled during this pandemic. And if you're going to be putting all your money into financials, thinking, oh, the banking sector is going to be, really quite solid, going to outlast anything and be a great sector to be investing in, any sector is going to take its hits every now and then, and the financial sector has taken a huge hit. So you want to be diversifying not only in index funds. The index funds will diversify to a degree for you if you go for something like the VOO S&P 500 or the Vanguard. But if you're going to start looking at investing yourself into companies that you can literally buy and hold forever, check my last video out that I did about 5 companies that you could literally buy and hold forever. You want to be diversifying across the sectors maybe as well, so that if something like the energy sector, the consumer discretionary sector, the financial sector starts to not perform very well, the other stocks that you have got in other sectors can balance your portfolio out and give you the returns maybe that you wouldn't get if you're in just one sector that wasn't performing very well. So this is going to be a bit of a shorter video, guys. I'm going to tie it up there. I don't want to ramble on for too long, but this gives you an idea of slightly risk-free investing, hopefully, and give you a bit of confidence in investing, a confidence in the market, confidence that given time, it is a relatively safe place to be putting your money. My eyes, far safer than the bank that's going to return you 0.5% at most, when inflation is going to be 1 to 2%. You're going to be worse off. So good place to be putting your money. I hope you enjoyed that video, guys. I know it was just me talking to a camera basically, but I feel really strongly about this and how more and more people need to get investing in the stock market and not just have their money sitting around or spending it on stupid things. I did that, been there. It's not good. It's not going to help you in any way, shape or form in the future. Start investing now, even if it's a very small amount. It's really, really important to start doing that, and hopefully these videos will give you a bit of value and a bit of guidance, a bit of help in order to do that. If the video has helped you or given you some value in some way, give it a like down there, and pop in the comments below kind of your thoughts on index in investing, any stocks that you think are probably a solid bet right now as well. Put it down in the comments and we'll have a conversation about it. But until next time, guys, I'll see you in the next video. Keep investing. I'll see you later.